So the Fed continues to hold interest rates near zero and signal that it'll probably keep them there through next year to help the US economy recover from COVID-19. So we have a year with almost zero interest rates, and we've been doing this for many years. The IMF basically said we can't keep zero interest rates any longer. We're spending way too much, and it's basically putting us in deeper inflation. The IMF conducted its annual assessment of countries' economic and financial development. They said the US Central Bank will likely to begin to scale back asset purchases in the first half of 2022. Fed Chair Jerome Powell reaffirms that the recent steep increases in inflation is just temporary. He expects our economy to recover fast. So far, the personal consumption expenditures price gauge that the Fed uses for its inflation target rose to 3.9% in May from a year earlier. This is the most since 2008. Both the IMF and the US government estimate the higher US spending proposed by President Joe Biden in the infrastructure-focused American Jobs Plan and the social spending-based American Families Plan, which have not yet passed, would increase growth in the GDP by over 5% next year, from 5% in 2022 all the way through 2024. So how do all these numbers and developments affect your investments? Lawmakers have released a wave of pandemic relief funds over the past 15 months. There's the $1.9 trillion American Rescue Plan passed in March, a $900 billion package approved in December, and the $2 trillion CARES Act of March of 2020. You can't just get all these trillions of dollars out of thin air. We're just printing money. All while our GDP went down because businesses were closed, manufacturing wasn't moving, and even small businesses shut down. We had more money, but nothing to buy. That equaled the loss of value of our money. Since the interest rates were low to zero, that meant the government wasn't getting their money back. This means more inflation. It all makes perfect sense. If the Fed increases the interest rate, that will mean the government will get some of the money back and will eventually stop printing money. Will that stop inflation from climbing higher? That's going to take them to basically stop printing money. Or we need to increase our GDP, which we haven't been able to do. We need to produce more products. We need to rethink our concept of money. The mere fact that there's one agency that has all the power over our money is absolutely alarming. For as long as the government can print their way out of problems, inflation will always be there. This means only one thing for us as investors. We need to take care of ourselves. This money system is faulty. We need to take precautions to protect our investments. Remember, diversify and make sure and take a look at precious metals because there's a lot of growth in this sector. Gold is a hedge against all economic turmoils, and it's always been that way. So take a look at your investments, take a look at gold, silver, platinum, palladium. Consider them in your IRA. They're great stores of value. And if you have any questions and you're ready to get into this, give us a call at 877-646-5347. Thanks so much. If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open and we're happy to answer any of your questions.